Okay, so today I want to discuss about our our challenge from $50 to $1,000. So I was thinking probably I didn't because I just came back from somewhere tonight. Actually, one of my friends he was beaten up by some hoodlum, so they beat him up. So I just came back from the hospital. I went to the hospital to visit him. So they beat him up that he couldn't talk. So that is where I just coming back from. So tomorrow also I won't be available. I still have to go and visit him and stay with him for some time. So that's why I say I will not or we will not be able to have our challenge for this week. We will not be able to have a challenge for this week. So I'll make it next week. I'll make it next week because throughout this week I'll be busy. Forex is not a problem. Already we have started forex, so forex is not a problem. But binary, I have to be available, be checking the charts from time to time to know find out when the market is good. So I find it that it will not be so easy for me to continue the challenge. So that is why I say that will be um, next week. So we're going to start our challenge next week. So for this week, there's no challenge for binary this week. So by next week, you're going to start. And before then, also another reason why I decided to have a class with you guys today is because I want to teach you three strategy. Okay, out of these three strategy, I will want you to pick one, study it very well, and master it and use it. Okay, so out of these three strategy, you must master one of it. But let me tell you, any strategy, there's nothing like only great strategy. There's no strategy that will be giving you 100% winning ratio all the time. What I'm saying is that there are some time when you what I'm saying is that there are some time when you try to draw a level on the chart, you analyze the whole chart perfectly and you draw a level, but the market didn't give you exactly what you want. Maybe you will end up losing the trade. So what I'm saying is that there's no strategy that will give you 100% winning ratio all the time. Okay. So I always say some people always say that the market is not always bad. Well, the market is bad. The market is bad. It's just that there are some times that you need to be careful. Okay. So let me just go straight to the strategy. Okay. The first one I want to discuss is about the. I think that was common in the forex that we usually trade in forex, but also is very useful in trading the binary option. Okay, there's one that when you see a downtrend and the markets move up and down, this is the area you should be looking for a sell opportunity. You know, this is what we call like um, drop based drop. Okay, the DB DBD drop based drop. Okay, so when the price rises to, that we still have another level here, right? At times the price might just return back to this level and did not respect this level, then to continue to the upper level. That is when you should be looking for a short opportunity. The pattern is just like this, a continuation of a downtrend, right? There are some time whereby you can have rally based drop, rally based drop. Okay, like here you'll be looking for put option, right? Then that means you have to wait for the price to rise to this point and place your trade. This is when the market, if the market is ranging for some time, if the market is ranging for some time, the market might decide to just go more down. Okay, so this is one of the strategy, but there's a way you have to find it. Okay, like I've taught you guys about supply and demand, so that whereby you have uh, the base demand and supply, or a single candle demand and supply. Okay, but here I'm going to use a single candle. This is binary option. I'm going to use a single candle, like supply and demand zone. If you look at this area here, you look at this area here, this is a downtrend, and the price move up a little bit and continue to downside. Let's assume you want to draw a level here. You draw a level here from here to here. Okay, now here we also have another level whereby we can expect the price to reverse. But one thing is that when the price reach the level, the sellers already entered. When the price touched the level, the sellers already entered. Then the buyers again entered, and sellers again still entered. Whenever you see sellers trying to enter the market, it seems that the sellers are trying to go more down from this level. If assuming the sellers entered again on the next candle here, the market will go more down. But sellers become weak here. Sellers become weak here. Immediately the sellers become buyers enter the zone. When buyers enter the zone, there was no sign of reversal. Okay, what I mean is that not all the candle, like what you have to see here is something like a hanging man. You know what I mean by hanging man candlestick, something like this. Hanging man candlestick, or a spinning top candle. A spinning top candle. These are the type of candle you should see, you should observe here. Not a strong candle with a strong body like this. At times it will reverse the market. Then also always consider the last candle that closed. If the last candle here that closed was a strong red candle, we can definitely expect sellers entry here. But the last candle that closed here was very weak, so it means the sellers are not interested anymore. So we can't expect sellers to enter from this level. That is why the price keep going or rising up. Okay, so let me find another. Okay, this is like a continuation of an uptrend, right? Continuation of an uptrend, whereby we have bullish, bearish, and bullish. When the price break this high, we expect the price to come back to that level and continue to the upside, but it didn't happen. So what the price does is that it goes back to this level, it goes back to this level and rejected, okay, rejected from buyers. You can see what I said. This is the type of candlestick you should expect to see at the level. Something like, this is just like inverted hammer, but this is not the correct inverted hammer. If you want to use a correct inverted hammer, you should have the long upper wick. The upper wick should be, uh, let me say, two times the body, okay, two times the body or three times. But this is like not the original uh, inverted hammer, but it's still inverted hammer because it has the upper wick. So these are the type of candlestick you can expect the price to revise. So you see that immediately the price reach the zone, it definitely reverses to the upside. Okay, it reverses to the upside. Now again, you can see this is another level, right? The price break the level, and the market reverse again. Only few buyers enter the market. Like I said, do not worry about this level. Always go to the next one. Only few buyers enter the market. Now, where should we expect buyers again to enter the market? Here, this is the next level. You expect buyers to enter the market. Now, as you can see, that here, remember this. Okay, I will show you in the previous one. When the buyers become weak, sellers continue to the next level. When they continue to the next level, they got rejection from this level, the buyers enter. When the buyers entered here, it shows that the buyers is available here. Now see that the type of candlestick that I say it should form, but this is not the candlestick you should be expecting. It should be something like inverted hammer. But this also can reverse the market. If you compare, or if you try to compare this candlestick with the other or with the previous one, you see the difference. You see that there is difference there. Uh, yes, they're different. This type of candlestick cannot reverse the market. This type of candlestick can reverse the market because it has the upper rejection. But this strong body, both though it still have upper rejection and also lower rejection, but the body is very strong. So you can't expect that type of candlestick to reverse the market. It is this type of candlestick that can reverse the market. Here, a Marbozu. This is what we call a bearish Marbozu, a bearish open Marbozu. Okay, so here we see that price come back to the same zone. We see some buyers entry. Now, if assuming that you did not observe this and you draw the zone, you already see buyers entry, you can decide to go with buyers again, because when you see a hammer candlestick right from the zone, you know that the buyers are now ready to go up. So it depends on how you look at the chart. Those of you in the signal group, you see that I said something about some these days I usually analyze the market using candlestick pattern. Okay, like from here, this is the zone, right? From the zone, we saw the buyers, the sellers stop at the zone with rejection, the buyers enter. I can decide to go with buyers again because this type of candlestick shows the buyer's interest. The buyer's interest because of this lower rejection and a hammer candlestick. A hammer candlestick from the zone, it shows buyer's interest. So buyers will definitely enter on the next candle. Where should we expect sellers entry again? If buyers enter here, no, the next level is here, or the next level is here, or the next level is here. Anyone. If the buyers entered again and didn't reach this level, buyers might again fill the gap. Okay, but it just buyers entered at once, fill this gap, also touch this level. That is why we see some sellers entry. Then if you observe the second zone, which is right here, the second zone here, immediately the sellers entered the market, buyers entered. When the buyers entered the market, look at this inverted hammer. Okay, look at this inverted hammer. That indicates the buyers are now ready to enter the market again. Where is the next level we can expect sellers entry? Here. We can expect sellers entry here. Okay, I think that is the only level we can expect sellers entry. So buyers entered again on the next candle. Then we still have some gap to reach the sellers level. Buyers again entered again, showing weakness. They again entered again. Now you can expect sellers entry, right? But immediately the candle close, the market, the price gap. When the price gap, that indicates the buyers are still ready. Like if I want to go with sellers, I will definitely go with sellers if the candle close open next to the closing of this previous one. But the gap to the upside, that indicates that buyers are now is going to enter for 1 minute. Okay, so if the buyers enter for 1 minute to observe the candlestick, definitely the market is going to reverse. So when you are trading, always observe the type of candlestick that close at the level you have drawn. You don't just trade. You don't just trade ordinary just like that. Okay, you don't just trade candlestick just like that. So that is the first one. Let's see more example. Let's see more example. Okay, here also we have this downtrend, uptrend, and downtrend. Here we have the market supposed to reverse. Yes. Also, we have another level where we can expect sellers entry. Yes, we have another level where you can expect sellers entry. But see what happened when the price reaches level. We are not expecting the price to reverse here, but here market might reverse. But you see that sellers entered, and again the market create the double bottom and break the neckline. Continue. When the price reached this level, there was a strong bullish pressure. There was a strong bullish pressure, okay, that break this zone. The bullish pressure break the zone. That indicates this type of candlestick after the last one, the last previous candlestick close. This type of candlestick is exhausted. Sellers, buyers are already exhausted here, but they see some space to fill the gap. That is why they exhausted the long candlestick happen to occur. That is why the market will reverse because this type of candlestick is exhausted. Also, the buyers also are weak here, no strength. So the market has to fill the gap. But the candlestick that fill the gap is exhausted candlestick. Definitely, that is why we see some sellers trying to enter the market. Now, one thing is that if you are drawing this type of pattern, you should not consider using left side. Don't go too far to be drawing levels using the left side. Always use the one that is closer. Okay, always use the one that is closer. Don't go and be drawing demand or supply demand using the left side. Use the one that is closer to the level you are using, to the price you are seeing. Okay, I think that is the first strategy I want to discuss about. Then another strategy, though this one is just simple, but it's hard to find. Okay, this one is just like um, using two lines, trend lines, horizontal line. Okay, here we, let's say, assuming we have um, bullish candle, bullish candle, bullish candle, red, 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 and here we have a demand zone, bullish candle, bullish candle. Immediately the price comes to this level, you know we expected the price to reverse. Already here we have bullish candle, bullish candle, bullish candle, bullish candle, red, 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 bullish candle, breakout, and the price break the level. So you draw from here to here, connect to this one. Okay. So once the price reach this level, make sure that the price corresponds to the horizontal level first. Then you cannot attach your trend line. That indicates that buyers might definitely enter on the next candle here. Okay. It's very easy to find. It's very simple to. It's not easy to find, but easy to analyze. Take a look at this. Let's say I want to draw a level now. Look at, let's say from here, okay? From here, I connect here and connect here. Then I want to draw the horizontal level for me to know where the market might reverse. This is how I'm going to draw it. This is the horizontal level, okay? Like a demand zone. So when the price reach the level, what happens? It touches the demand zone, that is the horizontal level, also touch the trend line. That indicates the buyers might definitely enter on the next candle. See what happened again when the price continue moving upward. We have another horizontal level here. This is not demand zone, right? But it's still horizontal level. So here we have the trend line as well, touching the level. So immediately the sellers come to this horizontal level, you are expecting the buyers to enter again on the next candle. That's why we see a buyers entry. So I'm not expecting the price to go more, but I just want to see a reversal, one single candlestick to reverse the market here. Okay, that is just what this strategy is all about. It's very easy to find. Um, okay, like here, this is the horizontal level. Okay, so immediately the price entered the horizontal level, touching the trend line, the buyers entered again. Now, this is another horizontal level, right? Okay, you can see when the price break the trend line, so the body is still touching the horizontal trend line. Break the trend line, but it's still touching the horizontal, it's still touching the trend line, and also it closes exactly at the horizontal level, so we can expect buyer's entry. Okay, Because when you are trading, a lot of people say, ah, this is a breakout. The candle has break this trend line. Let's go with sellers. But you have forgotten that the horizontal level also act as a support level. So we can expect the market to reverse here. Okay, let me see one more example. At times you can use a trend line, you can draw a trend line like this and use another horizontal level somewhere on the left side. This is support level. Okay, that is support level. You can see when the price reach the trend line, touch the horizontal level, you saw some sellers entry. Okay, here we already have the horizontal level, which is somewhere here. Then also trend line. But if you look at it very well, the market has crossed this level, right? The candle has crossed this level. But can we consider that the market will still reverse anyway? Well, for me, if I want to trade this kind of situation, I will not take any trade here. I want to make sure that the candle close exactly at this level. Okay, I want to make sure the candle close. I don't want to see candle break levels. Most especially the horizontal level. It can break the trend line, but I don't want to see in a situation whereby the candle break the horizontal level. If it break the horizontal level, I will skip the trade because the trend line might be so. Let me say, confuse you. The trend line might confuse you. Okay, so but make sure that it didn't break the horizontal level. Now, as it break the horizontal level, I think the next candle should be bullish because if they break the horizontal level, the candle should go more down. But it seems that there's no sign of bearish candle. There's no sign of bearish candle here. That means there should be a bullish candle here. Okay. Most of the time, it can happen that the trend line is something like this, and we have horizontal level. Okay, something like this. It can be something like this and have horizontal level. It can be something like this, horizontal level. Okay. Also, in a downtrend, it can be something like this, horizontal level. So these are the four patterns whereby you can trade this strategy. Okay, these are the four patterns. If the price is moving upward, you look for the horizontal level. Maybe you draw the trend line at the top, horizontal level on the left side. If the price is moving downward, you draw the left, you draw the trend line at the bottom. Then you can use the horizontal level. Okay, or here the price is moving down, then you draw the trend line at the top. You can see the horizontal level like this. If the price is moving upward and the draw the trend line at the bottom, you can use the horizontal level like this. Now you can see the buyer center because here sellers supposed to enter, but no sign of sellers. You see a doji candlestick, no sign of sellers because it has already break this horizontal level. Though the trend line will be so confusing. So horizontal level is the most important one. Okay, so definitely sellers will enter to go more down. But there's no sign of seller. That is why I know the price is going to enter on the next candle. Now let's see another more one more example. Okay, this is a level here. Now let's draw the trend line. Let's draw a trend line. Yes. Okay. So this is a level here. horizontal level. So we draw a trend line at the bottom of the candle. So we can expect the buyers to enter on the next candle. And that is exactly what is happening right now. So we see some buyers entry. Okay. And I think that is the second strategy. The third strategy, well, this third strategy, if you watch my YouTube video, I have already been using this strategy for a while. But though I have more than three, but let me just say this third one. This third strategy is all about using a bird eye view. What I mean by using your bird eye view to, I mean, using your bird eye view to draw horizontal support and resistance. What I mean by bird eye view is that not all the time you have to be zooming your chart like this. You can zoom in your chart like this. Okay, for me, I like most of the time I like zooming my chart like this. This is what I call the bird eye view because it's very tiny. The candle are so tiny in front of you. The candle are so tiny, so I call it the bird eye view. But most of the time, if you want to look closely to the price movement, you zoom in the chart like this. Okay, so if I want to draw a level, I'm using the bird eye view. Okay, this is the current price movement. Now look at the price bar. The price bar is actually here. Then I'm going to look for another level where I can draw another line. Okay, the price bar is now trying to go up. This is another level. Okay, this is another level. You know, the first one, we draw it here. The first one, we draw it here. The second line, I choose this because the price is somehow bouncing from this to this. So when the price reach that level, we can expect some buyer's entry. Here we can expect some buyer's entry because it seems the um, sellers are weak here. Inverted hammer. Sellers are weak here. So I think the next candle here should be a bullish candle. You can see that this candle, the market did not reverse here. Most of the time, that's why I say most of the time, market might reach a zone and not reverse. That depends on how the price wanted to move. A lot of buyers might be trying to buy here, but let's say a few buyers decided to buy while a lot of sellers decided to sell. So the majority carry the majority wins. So here in this kind of situation, let's say the sellers win the battle. So that is why the the sellers, the buyers are not interested here. But immediately the candle cross this level, a strong candle already formed from this level. That indicates the buyers are now strong. So this time we can expect, okay, the buyers are very weak. Though you see that it's still a green body, a green doji candlestick, but still a buyer's candle. Okay. So that's that what I mean is that when you draw the level on the left side using the bird eye view, make sure that the candle, there's a green candle that break the level to the upside. So which means if the sellers try to enter again, the market will definitely reverse. But at times, if you draw the level on the left side, the market come back to that level, it might not reverse. Okay? Because we didn't know why it's going to reverse. If you know why it's going to reverse, make sure that there's a bullish candle that have already crossed the level. Okay, but here we didn't see any bullish candle. The market just come to the level, so we can't expect the market to reverse. That's exactly what happened here. So there's no enough buyers to go enter the market. But this time we have a strong bullish candle that break the level. So that is why we expect the buyers again to enter from the zone. Okay. Well, this this strategy is very easy for me to draw the level, but I want you guys to go and practice how to draw the level. Always check the price bar. Look at this price bar. Okay, so when you check the price bar, observe where the candle is bouncing from to and fro. Like here, let me adjust it. Where again? Here also. Okay, these are the two levels the candle is bouncing to and fro. The candle got rejection from that same level, so we expect the price to enter and fill the gap, which means the bias is going to enter on the next candle to fill the gap by closing inside this zone. Once the bias close inside the zone, we can expect sellers entry from the zone. So I'm expecting a bullish candle here. Okay, here also I think this is not safe. It's not good. And we already have a strong sellers candle that have already crossed the level to the downside. Okay, the bias did not enter. We can wait again. You can still wait for the price to come to the zone. Okay, you can wait for the price to come to the zone, because most of the time market can just reject from the zone then go down. Most of the time the candle will just continue and close inside the zone, but in this kind of situation, wait for the price to come to this zone. So what are you going to do? Create an alert, right, at the edge. You create an alert at the edge of this last line. Okay, remember what I said. Make sure that after drawing the zone, make sure that there's a red candle that crossed the zone to the downside. That will make sure that buyers is definitely going to enter the market. Okay, that makes sure that buyers is definitely going to enter the market. Okay, so we can't just expect the price to just reverse immediately after drawing the zone. Make sure that the red candle crosses the zone to the downside, then the buyers is going to sellers, or maybe sellers or buyers going to enter the market. Now this also, watch. I'll go to the left side. Here, I think the market is bouncing from this level and this level. So these two lines, you can see sellers already crossed the level to the downside. So when the price comes back to that level, we expect sellers to enter the market. Already you have so many rejections from the zone. You have rejections. That indicates sellers holding this area. So sellers holding the area, expect the price to come to the level and expect sellers to enter. So the candle cross the zone, you can expect the market to reverse. At times, if I want to draw the level, I don't always, okay. Euro GBP, the buyers touch the level. We have some rejections. We have already have a candle crossing the zone. So what we need is the candle to close inside this zone. Then we can expect sellers entry. Remember, do not trade above this area or below. Wait for the candle to close inside the zone. Even though the candle didn't close, do not enter the trade. Still, it didn't close inside the zone. Or let me see if I draw the zone perfectly. Yes, I draw the zone perfectly. So I think this is the actual level. Yes. So we can't go with sellers yet, okay? Because it's still below. Like I said, do the right thing at the right time. Do not trade above. Do not trade below. Make sure inside. So if you don't, even though the candle did not close inside, do not trade at all. Okay. just skip the trade or wait for the price to close inside. Now, you see that buyers has already crossed the level. You can expect sellers again to come back because this candle already engulfed the area. Okay, you can expect, okay, I think rejection, 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 no rejection. So you can expect sellers to enter or buyers to enter. Okay, once the candle close inside the zone, expect the buyers to enter on the next candle because this candle already engulfed the zone. Okay, now we are seeing some rejections. Let's wait and see. Actually, still nothing. You can expect again the price to come back. Okay, still nothing. You can expect the price to again to come back. Using the bird eye view, something like this. So price is ranging here. Price is ranging here. Yes, here, here, and here. Okay. So rejection, only rejection. We have bullish candle cross the zone. We have bullish candle form from the zone. So we expect market to reverse. So what we need is the candle to close inside the zone. So we see candle close inside the zone. You can go with buyers here. Okay, the market is coming back to the level. So let's see. A very weak red candle, very weak red candle. Okay, I think there's a gap. There's a gap in the price movement. Okay, I think the market is still ranging here. I think this is the next level. Because of this upper rejection. Okay, I think the price has come back to the zone. We have a breakout here. No, still no opportunity here. Okay, I think this time the price should enter. I think this time the price should enter because we have the price movement here, the reversal, and also reversal here. Then the candle close exactly at the level with the rejection. Then we have this bullish breakout. So I expect the price to reverse here. Okay, still no reversal. Okay, momentum of seller, still no reversal here. Now you can see two times no reversal here, no reversal here, because maybe momentum of sellers are trying to go more down by looking for another level to reverse. Maybe this level. Okay, maybe this level, the sellers are looking for another level to reverse. So probably this level is no more useful except the price break a level to the downside. We have two levels that the market did not reverse here. This level and this level. So it seems that if the price come back to this level, we can expect sellers entry. Already we got a rejection from the level. There's a rejection from the level, but we are not trading rejection. We are only trading the candle to close inside the zone. Remember, this is supposed to be a bullish candle. You can see that even though it looked like a bullish candle because it's just like a gap, buyers quickly enter the market. That is why we have this gap. So it's just like a gap, but instead of bullish candle, we have a red candle. So we can't go with sellers. That's why that's why the buyers did not enter the market. Though it's still a buyer's candle. If you observe it very well, when the price close at the level, let's say this is a level, this is what I mean, this is a level, then price close at this level. We expect the price to enter, right? Because you know the price is going to move up. That's exactly what happened here. The buyers supposed to move up, but it didn't move up to close as green candle, but it moved up to still form a red candle. That is why no sellers candle, no buyers candle here, no buyers candle here. So here we have a buyers candle. Now we see the price come back to the same level, reject again from the same zone, again reject again, and we can't go with sellers yet. We expect the buyers to go to enter the market here. We expect the buyers to enter the market. Now remember, this is another level whereby we expect the price to reverse. Like if we have two lines drawn the same way like this, the first one is here, the first one is here, and second one is here. This is the first one here, while the second one is here. So here we expect the buyers again to enter, but there's no sign of buyers. So which means either the candle close here or the candle close here, which you can expect buyers or sellers entry. Let me draw the second line and see where the buyers might definitely end. Okay, the buyers end here. So we can go with sellers on the next candle because it didn't end here, it didn't close here. So we can go with sellers on the next candle. And one thing is that if sellers entered and closed inside this zone, you can go with buyers again on the next candle because the buyers already break and go off the zone on the left side. So let's see. Okay, the candle didn't close inside the zone. The candle didn't close inside the zone. It crossed the zone, which means we can expect market again to react at that zone once more. So let's check another one and let's call it a day. This is the now observe the price bar. Price is bouncing from this level and this level. So that two level, that's where the price is bouncing from. And we have a strong breakout, rejection again, The price has break the level. Okay, so and this level. So I think the next candle here should be bearish because the bullish candle is inside the zone. This is the first line I draw. The first line is here, right? The first line is here. Then the second line is here. Where is the second line? I think I draw it this way. Okay, I think the buyer should enter again on the next candle if the candle close here. Okay, uh, let's see USD, and gap down. That gap down is like is sellers trying to enter the market. Okay, just like this, buyers entered, but sellers show up. So here, if sellers entered and buyers show up, it means there's no sign of sellers. So buyers might continue. Come on, a little bit. No, okay. So that is the first line, and first line, okay, first line, and this. So here I'm expecting a bullish candle. Okay, I'm expecting a bullish candle. Okay, the bullish candle entered. Look at how I draw the line. This is how I draw the line here because that is where the price bar is bouncing from, and also here. Okay, here also. So between the two zones, that is where the market is going to reverse. Remember, when sellers entered, no rejection. It was when the sellers become weak, buyers entered. Let me see one more example. Observe the price bar here and here. That two lines. Is there any bullish breakouts? No, no, there's no bullish breakout. Let's check another level here. This doji is a bullish candle, right? Okay, so you have that one, and here, okay. Do you know how I usually draw this level? I always check where that there are times when the price will reach a level and stop there for a while before it make any movement. That's level is stopped, that means there's something going on around that level. So that is why I consider that level as where we can expect the price to reverse. Okay. It got rejection here. I think the market should go down. Although we have a bullish breakout here, although there's a small gap down, but still a bullish breakout, and it got rejection. So I think I expect sellers to fill the gap before buyers enter. But do not trade like this. Always wait for the candle to close inside the zone. Okay. Almost reached the level. Let me quickly find out. Let me quickly draw the level perfectly. Yes. I think we expect uh, there's no rejection. There's no rejection, no rejection, no rejection. That is terrible. There's no rejection. So that is why you see some strong sellers entry. Now, observe, look at it here. You can see the candle stop at this level. Watch again the next level. Here, stop again at this level. So if there's any rejection inside the level, you can go with buyers. Uh, the candle still go more down. Okay, and let me adjust. Okay, stop here. Stop here. Okay, I think that is where the candle next candle open. So we can expect buyer's entry. Okay, no buyer's entry. The candle is still going more down. Here, here. Observe next one. The candle is still going more down. Still going more down. Here and here actually. So if the candle got rejection, already we have a momentum. Okay, but make sure that this last candle is very weak, not to continue the market. Then you can go with buyers. Let's check if there's any bullish breakouts. Yes, there is a bullish breakout. Make sure below that line, the upper line, and not below the lower line. Okay, let's go with buyers. Okay, let's go with buyers. So I think they will be the last. Let's see if the buyers will enter or not. Okay, the buyers entered. Now, there's one thing I want to explain now. There are times whereby you draw the level and price reach the level. If you enter late, you might end up losing the trade. For instance, the candle has already formed a green candle, so you will just enter here, you might lose the trade, right? But one thing you should do, that you must be fast, or you must be vigilant, be sober. That means once the price reach the level, expect the price to enter to reverse, right? And make sure you must also be vigilant when the market is going to gap. Something like this, the market usually play a trick with us, whereby gap or fast movement, fast entry. Okay, once the price gap, you should know what to do next. If there's a at times the market will just reach the zone and immediately the buyers will just enter for once. Okay, if something like this happen and you didn't enter the trade yet, all you have to do is wait. Like, say, let's say for example, you the candle close at the zone and immediately buyers entered. Just wait for the candle to reject, reject. You might wait for the candle to try to form a red candle before you enter again. Okay, just wait for the candle to reject. If the candle did not form a red candle, we look at the observe the candle, the level that the candle wait for some time. You know, when the market rejects, it move like this. At times it might just stop at this level and wait for some, let's say, like 2 to 3 seconds before it start moving again. If the candle stop at this level, 2 to 3 seconds, you can enter a call option, because the buyers might still enter to fill the gap. But if you enter like this, like this, like this, and it's not stable, it might just go more down and close below your entry. Okay, or you wait for the candle to just like to form a red candle, then you are safe to go with buyers. Okay, so that is one thing you should know about the strategy. Most of the time the market might be happy to trigger a reversal. Like for instance, the market will just close at the zone. Once they close at the zone, a lot of buyers might be, a lot of people, a lot of traders might have get ready to start buying, to start placing call option. That is why the market will move so fast. So if you are not smart enough, you enter the trade late. All you have to do is wait for the pullback, because by the time the price moves so very fast, there are some traders who are still selling. So they are pushing the price down. And if they try to form a red candle, you can then now enter the call option. Or if the candle stop at the level and remain freeze for some, let's say 2 to 3 seconds, that is when you should enter the trade, because market might still just go up and fill the gap. Already it started from the buyer's level. Okay, this is what I need to explain to you. So go and practice the three strategy. I have so many strategy, but let me just say, if you try these three strategy and you have a good result, maybe I'll still bring another strategy, because that is one thing about our Sunday class. New strategy. So I just want you guys to make it in trading. So not all the time you'll be losing. I see someone, someone show me his trading history. Okay, someone show me his trading history. He didn't progress. So I was not happy about it. So maybe with this strategy, you can able to learn one of these things. And if you still don't get it, draw the level perfectly and show it to me. Then if you show it to me, I will find something to, or I will do something about it. Or if you keep quiet, you look at yourself like that, nothing happened. So that's how it's gonna be. Okay, guys, I think I should call it a day. So if you have any question, feel free to ask now before we call it a day.
So, sir, I have a question, sir.
Okay,
The strategy you just taught us now,
okay.
does it work on only OTC or it works in all markets?
It works is on all markets, not only OTC.
Okay. All right. Secondly, if one is using $50 challenge, or let me say I want to do $50 on my own self,
Okay.
what is the price stake you advise me to use? Is it $5, $10,
Uh,
or
for the beginning, there are some kind of tension. that will come up to you when you first started this challenge. Once you deposit the house. So if you want to overcome such a tension, you must start with $3 first. Once you grow the account and
Okay.
added $10 to it, then you feel free to be using $5.
Okay.
But I said something about the challenge that we are not going to start this week. Actually, one of my friends was beaten up by some hoodlums, so I just went to visit him and came back from the hospital. So this week I'll
Uh,
be not available, so I'll be visiting him in the hospital. So that's why I will not have time to be checking the charts and trade. So maybe next week we start our challenge on binary option. So next week start our challenge.
yes, sir.
So
Right.
before that, I'll share with us the money management that we're going to use. The first day, second day, third day, something like that. Okay, I think there's no other question, so let's call it a day. So see you guys
Okay.
next week. Yeah. So see you guys next week. Have a nice day. Bye bye.